May 12th, 2025. Today we had, a 3% gap up. Whenever I get a gap or we get a gap that's that large, I tend to just go look and see what happened. And we obviously had these really, really large breakout bars. And very high chance when you get bars this large, they're going to get some sort of symmetrical second leg. So I think there's a pretty good chance that we get somewhere into the 5890, basically the 5900 area, somewhere up in this area. But obviously, when you get bars that are this big, the market goes sideways for a long time as well. So, we could easily test back down to here and go sideways overnight, then drift up into the 5900 area. Less of a chance, but still a reasonable enough chance, too, that you just get a straight up measured move of these and into the 5950 area or 5940 area. And, at that point, you probably look to get to 6,000. I did exit my S&P that I bought, the other week, just because of the big gap, and just figured I would take some off. So bar one, a big bear bar, closing near its low. It's probably enough for at least a second leg. 2 and 3, this whole move is probably going to need some sort of symmetrical second leg. It's a 3-bar micro channel. There is a doji bar in the middle, but still a 3-bar micro channel, and it did get its symmetrical second leg. 4 and 5, probably big enough for some sort of second leg, but against this, you can probably sell and look to scale in and make money. 6, a bear bar, but after 4 and 5, 4 and 5 should probably still get some sort of second piece. 7, a bull bar, tail on the top. I would not really buy. I'd be looking to sell higher. 9, a bull bar. If you bought 9, you bought the top of a tight trading range. And if you're buying the top of a tight trading range, what do you want to see? Well, you probably wanted to see a breakout strongly above the bar 5 high and a close somewhere up here. Instead, you got disappointment on 10, and you have to exit below 10. If you bought above 9 today, you probably don't have a great understanding of price action. And I would take this sort of trade for many years. And it took me like 4.5 years to just accept, and convert to trading one thing and sticking with it. As if you watch any of my channel, I like love the 3-bar micro channel. It's I swear by it, and trading for a symmetrical second leg. So if you bought above 9 today, and especially if you bought above 9 and got stopped out and did not exit below 10, if you bought above 9, you exited below 10. It's not a great trade, but that is probably the correct management. If you bought above 9 and did not exit below 10 and got stopped out, you are 7 to 10 years away from being a successful day trader if you do it this way. And it's going to be a ton of work. And you might not believe me, and that's fine, but because people said, someone said that to me when I was starting out doing that sort of stuff, and I thought I was going to do it in 2 years, and then in 4.5, 5 years later, there I was sitting there thinking, I probably should have listened. But if you took the buy and you exited below here or got stopped out, just try for 6 months. What's 6 months, right? If you're going to be doing this for 7 to 10 years, what's 6 months? Try for 6 months. Trade the 3-bar micro channel whenever you get a strong one. You can buy Ali's white paper and use the 10+2 definitions for the strong ones. I recommend that. And then you just scale in when it's strong, and then you look for a symmetrical second leg. Today there was five trades, and all 5 of them were winners. This one, it got within 2 ticks. That's my definition. The high to the close got within 2 ticks. This one, we got a symmetrical second leg. This got a third leg, and then this got a 4th leg. This deep pullback, but got another leg. This got another leg. So it's obviously on days like this when it goes 5 to 5, you think, you do really good today. My first trade of the day, I did take 12, but it's actually not that great of a trade because what you should really be focusing on is trading the early legs, and that first entry was somewhere over here. And obviously we had a spike, pullback, and a channel. And so we were at the bottom of the channel. So I was selling the bottom of the channel, which isn't a good idea because this is probably where the trading range is. So I know there's going to be support here. And it was leg 4. So I was trading, one of my buddies who I was trading with, I trade with every day. He goes to me, okay, so you're selling leg 4 for leg 5. And that's what I was doing. And I kind of hesitated for a second and then said yes, because that's what I was doing. But you shouldn't be trading leg 4 for leg 5. You should trade leg 1 for leg 2 and leg 2 for leg 3. And so if, maybe 10, 11, 12, the late legs work sometimes, right? 39 work. So the late legs do work sometimes. But, really 10, 11, 12, not what I wanted to, 13 and 14, 15, not really what I wanted to see. And 14 and 15 are strong enough to get a second leg up. And 14 and 15 are part of leg 1. In this trading range price action. So I ended up reversing my position to long. So I sold the close at 12. I scaled in once or twice, and then I just took the small loss on the close of 13 and reversed to long. This was a very high probability one. I try to trade a little larger in leg 1 and a little smaller in leg 3 if I'm going to trade leg 3. I just shouldn't trade leg 3 in general, but if I end up getting, just end up doing it, I just always make sure I trade it smaller. And if I'm in leg 1 in a trade that I'm confident in, like 13, 14, 15, I'll trade a little larger. So I bought and I scaled in 3 times. And then we got the reversal. There's obviously something to be said. You know that 18 is going to get a second piece, so learning to get out here and then get back in. But in order to do that, you have to learn how to sit through the pullback first. So I bought more, and then I bought 33. I bought more during 34, and then I got out of all of it up here. So I had a pretty decent day today. That obviously more than made up for my loss. We got 30. So the rally to 33 is probably leg 2 after 3 to 4 legs down. This is leg 1 pullback. Now we're getting leg 2. And then we pulled back below 36. Obviously not a very good short after a 5-bar bull micro channel. So buyers below 36. Same deal, by the way. If you sold 36, I'd have the same message for you that I would have for you if you bought above 9. And if you did both, there you go. If you sold 18, you probably, it depends what you're trying to do. It should get a symmetrical second leg, but this is probably not that. You know that this is leg 1 and it's going to get a second leg. So 18 is ultimately going to be a minor reversal. As strong as it is, it could lead to 3 to 4 legs down, but it's going to be a minor reversal. Probably traders willing to buy 39. Good looking bull bar. I did not take it just because it's a later leg and I'm trying to avoid those, but there's nothing wrong with 39. You can see that we broke out above the bar 10 high and created a gap. When how you break out above one support point or resistance area determines how many more you will go break through. So when we break out above 10 and then get a strong follow through bar on 41, odds are we're going to go try to get to the 1 high, which we broke out above. Traders scaled in and they made money. That even though 45, 46, and 47 are reasonably strong, odds are we're going to go 1 tick above the bar 44 high since this was such a strong move. So that we're probably going to have to get back up to this area. If you're selling anywhere in here, look at what you're selling on the 15-minute chart. You're selling this. I don't really want to sell this. Odds are that the whole pullback is a bull flag. That's exactly what it ended up being. I remember I used to look for symmetrical second legs, but I used to, it was my instinct to go look for them on smaller and smaller time frames. Initially something like this gets a second leg. You can see. I believe it's exact. It might not be exact. 3, so 4 and 5, and 7 and 8. Okay, so it might be 1 tick off, but odds are, when I first started looking at symmetrical second legs, maybe like 4.5 years ago, instead of starting to think about the larger time frame, I started trying to think about the smaller time frame. And so if you're looking for intricate second legs within bars, what you're actually doing is trading a 1 or a 2-minute chart. And if you're holding for larger symmetrical second legs, you're going to have a much easier time because you're essentially trading the 15-minute chart. So I would recommend looking for the larger ones because the smaller ones require more detailed management and they require you to be a much better trader. And if you can't trade the large ones properly, there's no chance. I mean, it's like if you can't make a college football team, you're not going to the NFL sort of thing. And then, that's how I feel about when people talk about when I say to people, well, I bought and I scaled in, and people will say, well, why don't I just exit and then re-enter? I say you can absolutely do that, but you're not a good enough trader to do that consistently. And how I know you're not good enough trader to do that consistently is the fact that you're listening to anything I'm saying whatsoever. If you're a consistently profitable trader who makes 6 figures trading, you shouldn't be listening to anything I'm saying. But if you're not a consistently profitable, and I don't pretend to be, I've said it a million times, I'm not consistently making money, but I've been doing this for a lot of years and I'm starting to really understand it. And so I know people who are making money who started out doing the exact thing that I'm telling you to do. I know people who are consistently profitable traders who started out doing the exact thing that I'm telling you to do right now. You buy and you scale in, and eventually in 6 months, you'll learn how to see this pullback differently, and then you can get back in later. But just learning what needs a second leg by buying and sitting through the pullback is, that it's going to be that if you don't want to do that, and you end up becoming a consistently profitable trader, you're going to end up doing some variation of that. It's just you're going to do it in a couple of years rather than now. 63, 64, 65. I thought this was pretty good and it could get a symmetrical second leg. I did initially take the short, but it was late enough in the day and I was fine with my day. So I just ended up basically exiting for a very, very tiny profit there. The daily chart, really good bull bar. So but it looks like we're breaking out above the bull channel. So maybe not as good as it could be. Obviously, there's going to be some resistance here. We did break out above it. We'll see if we get follow through. We probably have to go to 6,000, I would imagine. And we will see if we end up getting a lot of follow through tomorrow. Bulls want follow through and a break above 6,000 and to get back to an all time high. Bears are hoping this is some sort of this is all some sort of bear flag. And then we get a second leg down or another leg down for the Bears. The weekly chart, I think we're in leg 3 for the Bulls. I'm going to get rid of this open interest thing. I changed my chart and now it's back and I haven't quite saved it properly yet, but I think we're probably in leg 3 and probably a larger trading range. I don't know if we probably get to a new all-time high somewhat soon, but the monthly chart, 3 straight bear bars, enough distance on this move that it should get some sort of second leg. And I think that we're at obviously 58, 48, this area. There might be some resistance here. I'm going to wrap this video up. The market's going to close in a minute. So that's it for today.